Do this one. So now the rotate, I know that you guys don't have this, so I'm just gonna quickly go over what I've been doing all week, this other than beside trading. So the ratio, okay, is basically everything. So you have four tiers. You have tier one. So the tier one is 95 plus ratio. Okay, is the go time. That's when you open a position at 95 plus, right? Tier two, 90 to 95. Okay, it's considered as a strong rotation. So I'll put strong RRG. Okay, so it's 90. Looks like a go. It's hard to use the mouse to write something. Tier three, 85 to 90 is a build phase. So that's the tier three. And then the tier four is anything that is below 85 is noise, laggy. There's a lag. Okay, so it has four tiers. So which stocks? I mean, I already filtered them. See, Apple right now has a ratio of 98.9. So where does it fit? Tier one. Autodesk 89.9. Getting close to it right there, right? So Autodesk is right here. It's right here. 85 to 90, 82, getting close. Blackstone, right? This is somewhere right here. It's not about the hooks that people watch. This is the biggest mistake that you can make. And it could cost you serious money, you know? So what do we have? 95. This. This is a stock to hunt. This is the go time. This is the key stock right there. We cannot trade all of them. That's a lot of risk. Okay? That's a lot of risk. We cannot trade all of them. We're gonna pick the best. This is number one out of the whole list right there. And then it catches up. 96, then the ratio goes week after week. Even the fact that when you look at them like is MSTR. Look at that. Look how promising does it look. Look, 81. It fits here in tier 4. That's why I'm not touching it. I don't care. It has a weak ratio. This is the one. Okay. It's very challenging. That's what I'm trying to, and that's what I'm trying to tell you. It's not about when you looking at just a 50 stock um is just the 50 stocks as weekly right there with some of them here, there. You see, like it's like Caterpillar, earnings came up, earning pop. Like look at Eli Lilly right there. It's lagging right there. Earning came up, stock pop like 50, 60 points. But then when you actually look at it, like it's very strong, you know. We gotta go into that 95 category right there. Bank of America is one. This, see, their Visa, United Healthcare. Now you go back to the technicals. So it's gonna match, right? Look at that. Just focus on 95. Look how the stock takes off. You know, look at Oracle. Fine. It has the buy signal here, but look at the ratio on this. Where the heck it went? See, Tesla is 91. Uh, where's Oracle? Come on, just oh jeez. Okay, right here. 81. It's tier 4. Look at that, 27. So because this is all default, that's why when you script them, that's why I want to clean up the garbage. You know, it's just to now I want to see like we take that this is the default. Now I'm gonna fix this thing to get rid of all the junk. That's it. 7. So all the 44s are the ones that disappeared, right? This is it. This. That's when the scripting comes into play. Yes, so sit down and do the scripting, fit these angles and ratios I'm gonna ask you. It's very complicated stuff, man. That's crazy. It gives you us like, okay, so now we go back here because don't think because there's a lot of earning pops as well. You see, Visa 94.9. I mean, on top of it, the news broke, the earning pop, the move came in as well. UNH. These are positioning. These are the tradable stocks. Palantir is the one, is still weak. Okay, it's at 90 right now. Okay, which is a tier 2, right? So it's tier 2 right there, which is right here. But it hasn't turned blue yet. Remember the rule: red, blue, green, and then yellow. The tail will change color. That's how I have this thing set, is when it will start picking up the ratio and momentum. You see, it's still red.
So it's not too late to get in UNH.
No, no, UNH is gonna,
It's a buy.
yeah, it's a buy. Amazon is a buy. Well, Amazon quite because it already made quite a bit of move. Apple is there. Now the thing is this. You see how close it is to the benchmark? So this is it becomes very challenging to pick something with a low alpha. These are the alpha trades, these ones. If you want to be further away from the benchmark, it's gonna make because it's making a wider rotation. A closer rotation doesn't, it doesn't mean you cannot get the upside, but it's not showing you the technical. Technical is here, right? Technical is here, but then if you had a stock that is sitting pretty close to the benchmark, yeah, the stock can move, but you know, you don't get a explosive move. A stock that are further away from the benchmarks are the one that actually move. You see, like UNH right there is kind of far away. That's why um, it's see, it's moving. And UNH can can make a run in the coming weeks. So you just turning the candles are just turning green. This is actually one. This is the key area right there. This is the here. This is the range it has to break. There, 381. And make this thing white or something. This 381. So if this one breaks because it's gonna secure this low, this is the breakout range because the stock will just get out of this range since it's been sitting of July 28 low of last year. It's a long time though. You gotta have to understand. This is a very boring system that I that I have, but it requires a lot of patience though. You know, I don't really rely on how futures open on Sunday night and oh my God, news broke over the weekend and this and that. I don't care much about all that stuff. All you have to and we have to care about is the cash open. You just wait for the S&P to open on Monday, then we'll worry about the rest. Futures doesn't decide anything. Cash session is everything. It's when order comes in. That's where the positioning comes, gets placed and all these kind of things. Real money comes into a play, into a cash session, not in a future market. Then see Palantir? That's what I'm saying is I know a lot of you guys, oh, can you show me RRG? Can you do this? And I can show you this, but you guys not gonna understand you because you're just thinking, oh, the hook is up and and I'm gonna just open up a position because it's gonna go like this. And that's what people do. A generic one is people don't have these what Optima gives you as a software. But then, I just showed you a generic one. Look, so how many are Salesforce here, Adobe here, you see? It's not like the stocks are not coming in. There are eventually they will be ready at some point, but they're just not, it's not, it's not where I'm comfortable, okay, putting a money in on the line because the hook is forming to the upside. That doesn't mean anything. This why when you filter the garbage, right, you just focus on the blue ones, you see? Amazon, United Healthcare, Nvidia, Apple. That's it. These are the only four ones here, the blue ones. And the other ones are in a tier two or tier three. Tier three is, remember, 85, 90 is a tier three is a build phase. This is when you start watching the stock. Then it changes into a tier two, goes into a 90 to a 95. That's a strong rotation. So you see Microsoft here, 88.2. Why do you think I closed the leap yesterday? I bought them, correct? I can buy it again, but I closed it yesterday. The reason why I did that, like even the fact it has that. Look what the stock has been struggling. The stock has been struggling here for 3 weeks. You see these highs here? First high, fine. It hit this 432, which is 38.2. So anytime when you're coming out of this low, anywhere the low is going to form, when you bounce back up, that's your first bounce and that's your second bounce. Correct? So first week came, backs off. A week before, tested, failed. This week, even with the earnings, when they're backed off, closed it. You see? It's struggling really bad at this level. So that's why I closed that. Why is struggling here? What is the reason for it? Even the fact that we have a real technical um, buy signal here, because it's sitting in a tier three phase. Remember 85, 90? I hope you wrote it down, but I can type it. Write the tier four. But again, I mean, you don't have to. I can. I mean, you try. You trade what I trade. I mean, just it's when I risk something. I mean, I'm watching, and so I'm gonna watch Microsoft for a couple days and see how it improves. Then we can roll another spread. I mean, we made money. I mean, I did like two on my wife's, four on mine. I made over $1,000. Like that's fine. So I was long like six, yeah, total six contracts. Like I'm like 99. Yeah, it was a nine. Yeah, I tried to adjust it to $99 delta trade. It was like I went so far out, all the way out in December, and for like six contracts, it has like a eight off like dollar like 40 negative dollar 45. I was like, wow, you're going out that much on time, but the spread is only costing you $1.50 to hold. That's on a six contracts, not even on a one. So it was pretty cheap. So there's just giving you a quick recap of things, what I've been doing behind scenes this week. Um, so what are we gonna do? Just yeah, it's very interesting and the challenging technicals that you could ever possibly learn and kind of go through them. It's because I'm always, the very first time when I got myself the software, and I always like I'm I'm a pure technical guy. Okay, you guys all know that. My style is strictly trade price. Okay, and I kind of came across in this, and I was like, I know that these hooks are forming, and then they bend down, and then they stay little, and then they expand, and then they change colors. Then like, what is the meaning behind that? What made these moves? You know? And then you start digging, and I mean, there's not that much material out there either. That's another question. It's just like, where the heck are you gonna learn? There's no books written on this thing. There's no like somebody wrote a book on the RG. These are the things like big institutes follows. And a normal retailer doesn't really follow this. I mean, look at you guys. Like you guys don't see this on a day-to-day or week-to-week basis unless I show you. You know, it's just like it is a learning curve, and you get to learn and get to see something, and it's not about a one blank chart and okay, well, this is a one, this is a two, are we gonna go in a three, and the pullback is coming, and how long the pullback is gonna last, and this is what I want to buy because I cannot chase an extended run anymore. And they got like those millions different things like running in your head all the time. Like, where do I position? How do I position? When I open it, when I close it, when this thing is gonna end, where's the top is. Like these are the talks are like, the Twitter is like full of it. Here's the top, here's the crash, this is the bottom, then we go up, this is a cycle, we're gonna hit this number, then we're gonna roll over, then we're gonna go down 10%, then we're gonna go this. Everybody is like all over the place, you know, and then what the market does, totally opposite, right? It's crazy how people are so much I've been watching this Uber, and it's in a build phase, it's in a tier three. Um, it's kind of, but the it's stuck for such a long, like, look at this. I mean, see the point? It's not about the buy. Look what the stock is doing. So imagine now
How many times did the was a
one,
first buy signal invalidated? Maybe three times, four times?
yeah. Because why? Because of tier three. We gonna hunt positions, and we're gonna look for positions, we're gonna open positions in a tier two and a tier one phase. Tier one is that's just the just that's the go time. That's it. You know, this one. This is the one to go. This is where the this is where the money is right now in this trade right there. This one. This breakout right there is happening. It's gonna go there. This is where the big money is right now. This some big positioning is in place in this stock. And then when you go here to a technical, look like this. That's the setup. Yeah, but the question now, because you see this huge move, you know, so it moved quite a bit. Now I just gotta has to work his way up. It will. This is ready to go. This is another one. This. This is a strong rotation. CEG. This. It's another one right there. This breakout happens here, yeah, it's gonna go. Okay. 92.4 was the tier two. 90 to 95. This is a new one. This is a tradable stock. CDNS is a tradable stock. So you have these two. CrowdStrike is in a build phase, which is right here, not there above, Yeah, this is weak. This is weak. Oracle, you see, 81, 81. Even the fact that look at that, where they are. But then you come here, it's not like that you cannot get an upside. But again, the you have to understand the most important part is that you're looking at a time frame on a weekly picture, not a day-to-day noise. Unless I flip it to a day, that's a different thing. Then we're looking for shorter moves. Those updates every day, you know, money flowing in, money flowing out, these kind of a things. If you're looking for a positioning that that can improve when to open a position, well, the system will tell you, you know, but it's there. These trades are there. They will be eventually ready in the coming weeks. Okay. So these, if somebody like, what would be my plan for what will be which stocks that I could open position now and which positions that I have of potential that I will be opening in the coming weeks is the list is here. These stocks.
Qcom looks good.
Huh?
Qcom. It's a laggard.
Yeah.
It's a laggard in AI data center, ecosystem.
It's 88.9. 88.9
Build phase.
is in the build phase, right? Now we look at the right there. There, the point is like I understand a lot of people rush into rush into a positions is because they wanted to buy as low as possible and they just don't want to get stuck with the higher price, right? Because what happens is like, okay, Monday opens, stock was like down like 2 points yesterday, and we open a position here, right? And and then the next week, stock kind of backs off and close it here, right? And now we're looking at like, what the heck, The timing was way off. We started off here, then stock backs off. Or it might not. Well, I don't know how the stock is going to trade. Nobody knows. But it's in a build phase right now that it's not on a wild move yet. Because the it's gonna go through that phase, which is the tier two right now. Sorry, the tier three, it has to get to a tier two to one. One is where the go time is. Remember the CDNS we look at? CEG, these two. They're ready to go. So it's very helpful. It's you can think will be it will help a lot to make the right calls and positioning is you want to do with shares, you want to do half shares, you want to own a stock, You can do partial option size position. You could just kind of have to um, um, define the risk, how you wanted to play it. Yeah, I kind of like the idea of always, because I have a growth portfolio is where I buy shares, and I have a swing account is just I strictly do options. That's just the whole readjustments this year since January 1st. It's just like I don't want to buy anything on my swing account like shares. Like, the point is not like you just have one account, whatever, $100,000, and then one account you own like six, seven companies that you bought like 30, 40, 50 shares. And then on top of it, you swing in account the trades as well that you wanted to do it on your own. Everybody does that. I know that. And on top of it, you want to plug all my trades as well. So your trades are running, my trades are running, and then you buy and you have shares as well. And they're all going on one single account. And every day is just like a clear, it's it's like what I am looking at. Shares are doing some sitting flat, some moved up a little bit. Option three positions are down, four, two are up. It's like your positions are down, your positions are doing up, mine couple positions are down. It's just like, what are you actually, because every stock is different. And you just have everything going in one single account. It's just not the smart way to trade. Just split the money. Don't mix stuff, you know? That's where you will your 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 main focus always should be on growth, to own something. You don't have to buy. I mean, it depends what you have. It's not like you gotta have to jump like, oh, I want to buy 50 shares, I want to buy 60 shares. Buy something, buy shares, you know? Fine, you can play a couple weeks moves or whatever. I mean, it's the same. The thing is this, it's the same concept. I don't like, you want to open up a account the options that, let's say you want to do 180 by 200 call spread, correct? So you want to do options. So 180 by 200 call spread, let's say it costs you probably like $5. I'm just throwing it out there. So one contract, right? So your risk is only fully defined at 500 bucks. And go to zero, you lose 500 bucks. So that 500 here that you trying to pay for this, correct? It gives you roughly, let's say, 20 deltas, correct? So you paid 500, got one contract, 180 by 200 call spread gives you 20 deltas. So every dollar move, okay, pays you 20 bucks. But now this 20 bucks, it depends how much you go out on time. Obviously, shorter the time is, more negative theta. If you buy more time, then you pay higher premium. So that could be 550 up to $6. So let's say you go out 30 days here, 60 days on this one, then you pay $7 probably for a 90 days. So the chain goes higher and more you pay because you want to buy time, because you want to say like, okay, I will at least, because the reason I'm buying time because I want to make sure I will let the stock breathe. Okay. And so you went out 90, and then in one single week you get to catch this move like this. Well, do you really want to sit on that trade or cash it out and run? You can do it anytime you want, correct? A stock made a move of 18.92% in a one single week, which was this week, which just ended. So if you catch a 19% move on the option, right? Do you want to just close out the position? Or just this what the first level resistance was? That's where exactly the stock kind of backed off. So if you targeted something, opened up here, that's just my first target line here, second, third, fourth, and so on and on. Um, that's what. So if you happen to close a $5 spread here, made a 20, so you made a 154 roughly to 187, right? So from 187 minus 154, that's roughly like a 33 points. So 33 points times 20 gives you like $660, right? So you can just literally double your money in a one single week. But the point is, what are your odds? What are the odds? Very low, right? So this move happened is because of earnings. You don't know, earning could have just gone other way as well, you know? So this stock is like pretty range bound. Last year low, this year low. So this stock has a double bottom from a 52 weeks low of last year and 52, not 52, for this year low so far is right there. So this is the double bottom right there. So last year high is this. So this is the entire move um, of a stock last year. This is April low. That's what most of the stocks put a bottom in last year, remember, at April low. So then from 52 weeks low of which is April, and this stock had made this much move last year. This. That's what the buy signal triggered here, worked its way up and up and up and up and up, all the way up till 205. So that was the move of last year. So that this year, since in January right there, although this actually high was made back on October 27. So then since last year of October 27 has been went sideways for so there goes October 1, 2, 3, 4, 8, 9. So for 2 months since May, it just literally went sideways. It just absorb the trying to absorb this move that it made over the months. It went sideways, and then from there it started rolling over. So now from here, that's where the year started, right in the bottom, 12/29, and it's just been making lower lows ever since here January. Here goes February. Here goes March. There goes April again. So bottom out again, put a double bottom, April 6th, which is last month, right? So it's been 3 weeks now for the stock to put a double bottom from last year. You see? So technically, a stock is pretty range bound, meaning, what does it tell you? So it made a move and made a full reversal back. It's a full round trip. And now it's trying to make a move back up. You see? So how do you define your technicals now? You have a double top, this. So the stock is it's in a box range. Last year move, and now this is where we are. You see, it's just a whipsaw. You gain, you give everything back, and now you're trying to go back again. So what is that? It's not like rotation is one thing, we get that. But we don't forget, we have to pay attention what the technicals are showing, how the structure is building. Structure is everything, correct? Remember, we talked about it every single day. Structure is structure. It's signal is there, fine. But we have to see like, okay, what are we looking at compared to 52 weeks high, 52 weeks low? What the stock has been doing? Is it a range bound stock? It has a, you know, uptrend, then it has a little consolidation because you have an expansion phase, then you have a compression phase. Expansion is one is where the market is right now. S&P, Nasdaq, you see like how everything is ripping for like 5 weeks in a row. That's expansion phase. What do you think the next phase is going to be? A compression. The 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 market is just going to take a breather. A breather means what? It kind of start gonna go sideways. You don't really make wild round trip moves on uh, on indexes and stuff, you know? So you just had the same thing is like wave one, wave two, this is the wave three, which is your expansion phase, right? This is where the market is. So when it comes four, so does the four goes like this? Well, we have a different debate if that happens. So you technically just look at a three-way move and just a sharp reversal back down. So the real picture is on the trend is you have a low here, you have a higher low. This is where the price is moving to the upside. And then from here, eventually whatever the top the stock is gonna whatever the top is, who knows? And then it has to buy some, it has to consolidate. It has to catch up on, depends what the cycle shows, how much extended the price is. It just, this price stock is going to take a breather, you know? So the money is all here. This is where the most difficult decision that everybody has to make is, where should I book my profit that I am in such a sweet position at the higher low level? Should I book it here? Should I book here? Should I book here? Can I just let it run? You see? It's trading is a mind game. It's not about you have to sharpen up your technicals every single day, or I want to look at this, I want to learn that. You have to train and master only, and only one thing is your mind. Master that first. Then you're gonna start coming to a technical world. What the actual price is showing you on a chart. The fear that most people has every single day. And I open a position, I put this much money in there. Do you ask yourself a question is, do you feel good about it or not? If you're feeling, or if your expressions you thinking like, okay, I just got in. That's not the answer. The answer should be like, do you feel good and positive the minute you open a position? That's what matters. You have to feel good about when you enter them, when you open a position. I open a position Monday morning. I feel good about it. It's like, okay, good, I'm in. Position opens. I don't have like, oh, this thing is more. I'm gonna throw some money here. That's what most people approaches are every day. Okay, oh, this thing is running. I want to get in. They're just chasing like a wild runs to the to on extended stock. I mean, you don't know how much the stock is gonna go up. It can go up another 2, 3 months. Those higher entries are dangerous, you know. I mean, you missed out, you missed out. That's not the end of the world. You think you cannot make money on other stocks? If that stock, if you missed out on one particular stock, fine. Stocks has cycles, as I can see everything here, which one is running and which one is cooling off. But you can't. Nobody can catch every cycle. Yeah, fundamentals changes, but prices is reflecting everything. Demand is up, this and that, fundamental coming up strong. Yeah, prices is that's what the price is doing. So it's more and more and more you trade. That's how you learn. You gotta sharpen up your mind. Technical picture can just what is the average time? Well, buying shares is, I think, let's say I want to buy shares on QCOM. I think it would take, it's a matter of like how many shares I wanted to buy. I would think, how long does it take to buy shares? I would say like less than, 10 seconds. You pick a number of shares, hit submit, boom, then that's it. You in, right? Call like 15 seconds, give or take, if you just want to buy it right where the price is at. Options, it could take, I would say, probably like an average of close to a minute, because you just gotta have to go through strike prices and depends, how far you want to go out, how the premiums looks like, what the elevated, how the IV looks like, things like this. You gotta have to read the whole option chain. What is the expected move on a certain time frame? I want to go out in 2 months on time. What will be the expected move? That's one. Then you got to look at the ATR, right? What is the average true range on that stock is? What is the one SD, like look at the one standard deviation move, a two standard deviation move, right? So you look at those things. You look at how cheap the premiums are. Am I paying elevated premium? Are the premiums that expensive or not? These are the things. So these takes a little bit of time to structure a trade. Butterfly is the longest one. Butterfly is the most lazy trade. It takes a lot of time to structure a butterfly because you have not two strikes, now you have three strike prices that you have to constantly like you have to adjust to see like, okay, where do you want to kind of like center the butterfly now around the price, to stay in that range. Doesn't go up too far, doesn't come down too far, then it's gonna hurt me. Because you're trying to build a range like some sort of a box, but the price just kind of takes a bit of a breather or where it is, and then you collect some time and dump it. That's it, close it. So we gotta do, my goal is like every month to do like at least like 2 to 3. It all depends. Can I promise you all that? Because it's all depend on the IV. It's to do like those income flies. Um, just to, cover your rent and your mortgage. I do it for the mortgage, to be honest. Every month. I always have butterfly going. It just, you know, not like every one of them is gonna pay, but like Shopify I did, the it just I let it it's all cleared now. I just let it expired. I capped the upside for me was 46 $36. 36 or 46, $36. Worst case is like all three strikes closes in the money, and then that's all you can lose is 46 bucks. That's on a four contracts. $1,000 trade. I think I paid $2 something. And I capped the upside in case. Because the reason why you want to do that is because of the last day of the gamma. And when I looked at the trade on Thursday, it was doing pretty good, right? Because it was sitting right, because I centered that thing right at that 120. And then yesterday, stock exploded 5% to the upside. I was like, oh, there you go. That's why butterflies are very dangerous to hold in the last couple days to the expiration. Okay, they're not the the fun ones to hang on to. It's like, oh, I'm gonna pin this thing. There are some time, depends how the stock is doing, that worth holding. So like, okay, I will, let's say you had a butterfly that you've been holding for like 2 weeks, 2.5 weeks, right? And then we get to a time phase that you've collected plenty of premiums, then let's say you have five, six contracts, and then you end up closing like five of them. You say like, you know what? I'm gonna book profits on five. I'll just YOLO, one contract all the way till the end. There's sometimes, there are times you can do that, but they're just, again, you just, plus the thing is this, that you don't have enough time to make any adjustments because you're just gonna run out of time. It's just, butterflies has flexibility that you can adjust if you have a little bit of time in hand. You can move it around. You can open up another one, or you can just do a diagonal or something like that. You can make some adjustment as long as you have time. But again, the point is not sit and oh, I want to pin this thing because I risk in $1,000, and if I can come really close to the body of the butterfly, I can make 3 grand. That kind of a mindset is just like it just destroys your emotions. And no, you don't want to do that. Just I try to um average it out like 1,000 a piece if I can. Run like two, three of them. That's it. Mortgage is covered. I'm good. The rest is just all directional gambling. Going up and down depends which direction are we looking at. Yeah, these are lazy income trades. You can it's just to burn premiums basically. Just to sit back and just collect time. Um, a quick recap. Oh, this one is interesting. This Go through that. Um, that was funny as hell last night. Sarcastic. I updated everything here. Let's start this. So I did decent last month. I wouldn't complain. I gotta close this one. It's $46. I don't know. I'm gonna have to log this. It's basically for me just a scratch. Um, we did good month. Closed bunch of trades. Broadcom, Amazon was SPY. We did. I think that was a butterfly. We did 4.5. This was the income fly right there. And we did another one on Oracle as well, right there. This, so we closed this one. Did the ladder yesterday. That's just something probably you guys probably never did it before. Ladder, remember? Calls and puts. So you don't get the mess like you are protecting the downside, right? You're trying to play the upside. You can do the same thing to the downside as well. Like if you take a bearish position, then you sell two to the downside and you just buy one protection to the upside. But you always have to remember one thing, the ladders carry a heavy negative theta though. Okay. So remember that. There are very similar to a back ratio spreads. Ratios is the same 2 to 1. You long two and short one. But then this ladder is like a same concept of being too long and one put short against it. You don't want to do two and two, it's going to kill all the delta. You always like to say one, and then you want to do four, then you go two. Then you do six, then you go three. Then you go nine, that's how you go. That's how you do it. You always double the calls against the protection. So you hedge the downside in case of the price rolls over, and you can always close one side and the price really kind of like taking a quick move to the downside. You can just simply close the call side and let which is going to be more because you are long two to the upside, so you have more risk going up, but you have one to protect against the two. But then you just have to structure um, a ladder this way that with the strike prices, that if the price does rebound back on your face, you know, that your downside here, it should be like low as possible. Like I did, like this trade right there, right? So I did 4 to 2, right? Right there. So the ladder setup is all about positioning, is not guessing. So you have 2 times calls, bullish, push, 1 time put downside protection, right? So leaning upside while getting paid if it breaks lower. Sizing rule, if you participate, call side must be double than the put side. So for example, 2 calls, 1 puts, 4 calls, 2 puts. Okay. So the catch is expansion to get the push as quick as possible. So now you got to look at this. $7.60 premium that was on a 394.30. So that's a 30 points wide spread, right? So that was the expected move. Shows up on a May 29th, which is the end of the month, right? And then the same May 29th, 375 and 350, even the fact this one is a 25 point widespread. But look at how much it cost you, right? So now so this is what I did. I already closed it. So I did 4 here and 2 here. So in the end, you don't count them as 2 separate trades. It's a one trade, because you just had the protection against it. So now you for 760, because it's all the delta, because every time I analyze the trade, I always look at the delta, times 4, it costs you 3,040 bucks. So that's the call side that you did with 4. And then for 915, cost you $1,830 with 2. So the difference here is $1,210 between these two, right? Now in this one, we're trying to see like, okay, we can get this move as quick as possible. A downside here, okay, it's not going to be 1,200 fully because I think the downside was like 400 bucks or so, something like that. The way I did this. And then from here, we're just trying to see if we can catch this quick move as possible, you know, because if the price stays in between, because you have a gap here, you know, before for the puts and calls, meaning if the price doesn't move enough far, or if the price doesn't really go down that enough far, and you just kind of like literally stuck in the middle, oh yeah, that theta there is gonna eat you out. Even the fact that you're trying to go you pick even the fact because you're 4 times to the upside and you're half the side to the downside, but you want that move as quick as possible as well, to pay you 4 times. So in the end, you making a 2-time move to the upside. Okay, because when the price moves up, puts are getting hurt, but you're getting paid 4 times against you. So that's what they call ladder. You know, so little by little, I'm gonna do some of these called exotic options, so you can kind of like learn and experience and trade them. And this way you will know as well. And you can't do it on every stock. It's the ideal stocks are always a high beta stocks. Okay. The stocks that actually makes wild moves, right? Tesla is obviously is one of them, which we all know. And yeah, these are good way to, I mean, diagonals we can do, we can, butterflies we can do. Um, so these are just like you're trying to play the move you're not too sure about because I was not the reason why I did this is because I wasn't too sure about the not too sure the stock is going to rally much. It can move a little bit, but looks it doesn't look like you're ready to explode. It's not the remember we talked about the ratio. It's not there yet. So it's basically sitting right in the tier four zone in that 88 kind of ratio right now. So it could, I mean, could go into a build phase sort of because it moves pretty fast, and then once it's start leaning more into the tier two category on the RRG is just when I will get a little more interesting. And I mean, here there we can swing a shorter term moves. We can do that, but not something that you really want to position a little heavy on them or something like that. So these were see income this spy we did. So these are this is a Oracle, you know, and Oracle had was a 171. Oh, they actually closed right in the real at the tip of the body. Oh wow. Oracle close yesterday would be 171.50. So we actually closed right here. Right here. That's the close yesterday. Now imagine because you're long 102 deltas against this theta and the close would have been here when you probably made like, I don't know, 200 bucks, give or take. I can analyze it to see exactly what the close would have been. So if we close it here at 165.67, that's the spot price. And if you close them at about actually expired yesterday at 171.50 minus 165.67, that's 583. So 583. I mean, very good. Five because 2021. Yeah, you'd have made like 438 bucks, give or take. So it's like less than half. And because, again, the point is, last day, this was, when did we close this? Couple days before. This is where it's going to come, is going to kick your ass. Gamma. This becomes really dangerous in the last 2 days or so on a butterfly. So it's all good. The point is, I personally have been doing this thing for years and years. I can snatch like two of these a month. It's just, my mortgage is like, I don't know, 2 grand, 2,100 bucks. That just covers my mortgage. That's how I do that. I, um, just an income fly, just to sell premiums and kind of stay. But again, it's this, you can't do it on every stock. It has to be the cycle has to be, it's all depends on a cycle what we're looking at. So, I mean, we got, I mean, this month, last month, because we started a new month, I think I only took one loss. on this DLTR. The rest of them are all carry over for like freaking 2 months. These, well, I have to log them. These are like old positions. These are, I even, if for the whole month, that from the first till the end, first till the end, the only position that was the actual loss for the month is only one position. This DLTR didn't play out. These are all carryover stuff because it went to earnings and all that kind of stuff. I'm like, okay, what can I do? This one expired. These are all carryover positions. So it did pretty good for last month. So, but I gotta log them here. Now the other ones are, this one hurts. This sucker, I'm glad I cut that on earnings. This is working. This is almost flat now. Down like $90 right now as a close yesterday. Got a huge pop yesterday, 9 points. ZS. I don't know what I'm gonna do in this one. I love to hold it, to be honest, because Monday after the close we have earnings. So um it's in a sort of like right into a tier two phase on the rotation. I just again I'm not comfortable um holding a full size position into earnings. So it's probably gonna cut them on Monday. Not the full position. I might just turn them into a lotto. If it goes, it goes. If it, who knows, you know? But I'm not risking a full size. So I'm gonna make adjustments here. Okay. GLD is working. You know the game plan on this, right? It's the defensive month that we're trying to fight, which I will show you in a second. Disney is working. Tree got hit yesterday of the earnings. Here's the thing about this stock. The earnings weren't that bad, all right? It's just this damn stock is just range bound for so long. This, this stock is stuck. It has a triple bottom, okay? And you got this range of this triple bottom right there. So that's a very strong support. So it made a fake out here, as you can see, and then it backed off over time. So it's a very range bound stock. I mean, I have shares. I don't mind holding it. Okay. It's not like I have a massive size position. Um, I want to see like how this thing will resolve. To me, it's a clean five-way move. This is some sort of a wave two is in play here. That's why it is so because there's nothing really clean to the downside. This is a bunch of choppy move back and forth against the triple bottom. So I got all the time in the world. Um, it really doesn't bother me to hang on to this for now. And I'll watch and see if if it gets a little attractive. I mean, there's nothing, I don't know. I'm not trying to double this thing with the option or something. I'm just gonna leave the way it is for now. Just want to see how it resolve, you know. So that's the move that the stock made this week. This bar right there. So from here to here. So it's just it's some sort of a wave too. I think it's gonna go. It's gonna turn around. So we'll see what happens. So that's how I'm looking at this stock. Just don't want to make any Um, like earnings were good yesterday. I looked it through. It's just demand is just the everybody was because of the higher rates and there's not that many, loans that they're actually doing. So whichever they did good. So yeah, this is it. So we'll Ames is okay. This is out till September. It's kind of a little choppy up and down. Still working. Yeah, it's okay. I'm just trying to see. Hey, what happened here? I'm trying to see if it could, geez, it could just make its way up toward this 36.37. There's a 38.2% retracement. So that would definitely will pay. The spread will pay. So it's got a huge pop, as you can see right there, and made another. So this week was a lower week. So this week was 10.31%. Um, see if I mean it's okay, it's technically valid. That's your low, that's a first swing, higher low, higher high, right? So you have this, you have this. Now you want to make sure that price continues and see if it can make us push back up in a couple weeks. Because I have a lot of time until September. So it's not like something that if it goes up next week, good. It takes a couple more weeks. We're okay. I mean, we're okay with that. I'm okay with that. So we're just gonna give some time and see how it plays out. So I bought a lot of time for it for a reason. So that's the plan on where the how do I get rid of this? Okay. So that's this. Um Dark is just bound. It's very low. I like it. It's not a very massive. It's a huge. The I'm trying to see if it can. So some this stock is gonna get hits with some sort of a news. It's just getting really, really tight. This spike is gonna eventually is gonna come. So this is some sort of a the price is just getting really, really exhausted here. So we'll see. Cashier, I'm fine with that. It's just, this is a diagonal. It's gonna give a sharp reversal to the upside any week. I don't know when, but so this is it. I mean, I don't know what you guys did on your own, but this is what I trade. So it's all here. We'll continue the downside 110 trades so far since September that we've been logging everything until the April 77 against 30 losses. 4 was break even, sitting at 70. I'm happy, fine. I really like to be around 75 as possible. I'll get there. But I think 70 is still a pretty good win rate on 110 trades. I know they gotta go up to 200, 300, 400, but we continue, keep logging everything and see how each trade goes and keep track of them. It's all here. So every time guys should have the same thing right there, canvas. So every time you can just screenshot it, save it, and then I'm gonna start a new one to the bottom and just track of everything what we do. So everything what is here, 16, 18, whatever, depends how trades went. This and that's all being calculated here. Um, the month, and then because we started these signals in September, so I've been tracking everything since September. So it's been September, October, November, December, January, February, March, April. It's been 8 months so far. So in 8 months, 110 trades. So, I mean, as you can see, I don't trade a lot. I don't know. Some people probably go freaking 20 plus every month. So 110 divided by 8, that's an average of 13 trades a month. That's what it's based out of. 13. And trust me, like me personally, a lot, like if I could trade 10, 11 trades a month, I'm good. That's it. Depends how the when. Um, I'm, I'm super comfortable with the risk that I take on how I size trades and things like this. 10, 11 trades a month for me is perfect. Not too much pressure, not too low size. It's just like right in the mid size you know, that one, the 20 mark, and that's crazy. That's crazy trading. Once you exceed 20 plus trades a month, that's a lot of freaking trading. So yeah, it's what my the average is. So we'll see how it goes from there. Month by month, we'll take them. Some month goes flat, some go, up and down, but two positions are down. I'm gonna open a third one to see if I can win that one. So we're looking at the overall average. We don't just focus on one or two only one or two. There's more positions that are coming. Okay, I'm gonna open something probably Monday, probably Wednesday or something. So anything can hit. Income fly can come in between. Directional bet will come. Like either or, it doesn't matter. It's just in the end, we're looking at the average. It's all gonna add up in the end. So look at that way. For the like this week, what we did Monday. So on Monday we closed this pig, right? 847, right at the market opens. Closed that one. Opened up Tesla. That was a quick reversal that I was watching a fib and opened up the 20 points widespread, 653, $6.53 that I paid for. That was just Tesla is like it works really well with fibs, you know. And that's the thing that I'm I'm good at them is how to set up fibs on a price. And it came in and the price came and hit the 161 mark, what I was looking at on my chart. I just opened up this and it just rebounded really quick. So that timing was perfect at the low and end up reversing right back out like $1,500 or so. 100, wait, the delta went up like 80 or so. So that was Monday. I closed this. That was like act like a day trade. Then we closed Income Fly that we're holding off, correct? On Tuesday, we closed the SPY, closed the Oracle. Then we opened GLD, that's a new position, right? So that's two Tesla in and out same day. Then we did the ladder, correct? So we hit Tesla twice this week. And Shopify that just went out $46 negative. Then we opened up a long dated leap that I ended up closing yesterday as well. So that's the ladder yesterday. So we did I did like over $2,200 on this on this stock this week. Did the reversal, intraday reversal, and the ladder. right? And then Shopify, that was the update. Microsoft, that was the leap. The that did 2 and 4. That was total six. Four on my account, two on my. So I do those because I have the all account screenshot. It's not like I don't know if I really want to post these screenshots, to be honest. I know some people kind of like to see some numbers and stuff. I don't. I'd rather just do this. Just see what the exit is and sorry, what the entry is and what the exit is. And it defines the win rate, tells you or what the loss is and what the win is. I'd rather do that. I just, kind of used to it and here, there to see like, hey, this is what the position went. And it's not like I don't like that. It's not my personality showing off numbers. I know like on a Twitter you go like, oh, I made $500,000 this year, or I made $600,000 this year. They're taking those screenshots and I made like 10 grand. Like, you see it all the time. I don't do that. And my Twitter page will never show you that kind of a wild kind of numbers. I mean, I have a huge account. You want to see some real numbers, I can show it to you. You want to see 70, 80, $90,000 payouts? I will, I mean, I can show you, but it's not my account. Why would I do that? I manage for other people, but that doesn't mean that I have full right to expose their privacy or, they wouldn't care, wouldn't mind something, but it's not like I'm like on a Twitter, like, hey, I'm making like 70, 80 grand, this and this. People like looking like, wow, this dude is like wild and like going crazy. It's just like get cash that attention is like people like looking like, oh, yeah, he traded with some people. They must be doing pretty good. And this guy is making like 80 grand or something. They're probably pulling some big real cash as well. People that expectations, they just the goes this way. They don't get to see like one guy's like freaking taking $100,000 risk as well to make that kind of money. So other people are not risking that much. You gotta see the difference. But that just because these kind of a numbers, dollar signs that just catches everyone attentions. Just not my personality. That's all. I'm a professional trader. Okay, I mean, I don't do these kind of cheap moves. Okay, that was housekeeping. Um, Wave count. Um, I don't know. This just keep on going, as we all know. This is a 5 months run. This is a March low. They've been tracking ever since. The question is that where does this third end? Eventually, it will at some point, and then there's going to be a setback here of wave four. So that's a wild move. I don't think it's gonna be a pretty huge or mess. I mean, I don't know. I cannot tell, but this kind of a price action usually just kind of goes sideways for some time. It's gonna get real choppy. So I don't know. At this point, shouldn't any? I mean, we can run downsides and stuff, but it can all change. It depends where everything will move. So don't want to raise any kind of a put any kind of expectations. Trend is up. Just keep looking up. So this is the zone that we're in. Um, all the Mag 7 earnings are out except for Nvidia. Nvidia is what a nasty rug pull they did on Nvidia. Wow. I think it's just Nvidia just gonna keep lingering around that 200, 190, 200 mark until earnings. The earnings are still um 4 weeks out because it'll be the last one to report. Um, so it's just backing off. Like to buy that one um after the high because it says that's the higher low. We'll go through them. So this I don't know. I mean, whatever third ends. The guns here, here, here. Who knows where the heck this thing is going? We'll make the case of the fourth wave, and I really like to set up a butterfly into a wave four. That would be a good, but we don't even know how it's gonna go. But at least I could make some adjustments. I can run some, and whatever. It depends how it goes. I need to work off cycle first, then how I structure the strike prices around them, either lower or upper. The cycle has that thing. So, um, wave three here, which actually went beyond this 261.8. This thing is fucking going wild by 5 points. Okay, this is a very strong zone. Okay, watch this one. 261.8 and 200% extension. This is a very strong um, zone. Okay, so there is a pretty good chance this Q is gonna hit 700 mark, 700 and 750, give or take. But the question now is, do we just go straight up? Do we cool off for a little bit, and then goes up? Well, that's what we're gonna find out and see what happens. Okay. So we have it. I do, send you a screenshot during the day, but there's nothing really do much here because of the rip, there's a little bit of a lot of choppy back and forth. I don't know if this is all of five. Like you see, like if we can do this, that's possible as well. So you just do one, two, three, four, five is to complete this. There's many ways you can change the wave count. You don't just marry to, okay, this is the only outcome. You have to think multiple, like, the way, the Elliott is, you cannot be just do one chart, like this is it. You know, you have to think different ways as well. What if this, and, plan A, plan B. So what if this is like this? And then this is some sort of another, like, come on, like this. So now if that happens, that means that this is all of five, and that gives you a ABC move to the downside. You see? It gets a little tricky when you have a pretty extended move. This is just all completed five. That will give a reset back of one to ABC to the downside. Or this is all of three, and we're looking for four. You see? It's always like this, like either this, or we just like move the third here, four here, and five here. So East goes either or, You see, this is the thing about Elliott wave. You just gotta have to, but you don't look. You don't have to worry about Elliott wave as long as you're here with me. Okay, I can assure you that. You look what I post, and you just pay attention to it. That's all you have. Don't worry about labels. How I'm gonna do, leave that thing on me. Well, if you say like, well, I want to do all this, well, you have to spend years and years, okay, to to work uh to work on Elliott wave. I did this yesterday, right? Look at the high yesterday. And I don't want to move this, and I'm gonna keep it the way it is. and we'll see what happens. You see yesterday high? Actually, I can show you right there. Oh, two, here. See the high here? Look. This is right there. This is the evening star candle. This is a bearish candle at the close yesterday on a daily. You see, like it popped right there and it faded, it closed here. And this is the evening star, which is considered as a bearish candle daily. Well, that doesn't mean that it can reverse. Depends how it opens, and um, this is the first drawdown to this high is where this setback in the whatever the war to this high. Okay, so it's gonna face some channel resistance right there. So any throwover from here can exceed to 74.50, but price is gonna be sitting around right around here for some time now. Okay. So this S&P rate, I don't know if this is completed five-way move or this is going to be a 1-2 move. I don't know yet. Okay, so far it's there. We're right there. What's the high yesterday? 72, 72, 72. This was a 72, 76. Okay, so we're off like 4 points. So you don't need none of that. So anything that that rips up, you get rid of those. Just clean the chart. You have a stack and the price reaches that fib, crosses above it, just remove that fib. You don't need them anymore. You know, you just keep, because you stack them to the upside and you just like whatever, one of them is going to grab it. That's what the point is. One grabs it, backs off, then clears through it, just get rid of it. Then you're looking for another one up. Reaches reaches that one, slice through that one, get rid of that one. So right now, we're right here to this 72.76. The high yesterday was 72.72. So it has a channel resistance from this high and this high, correct? Because these are the major pivots. So so the range now where the market is willing to sit for some time is between this range, between 7,000 and 72. So it's like about 270 point range. So you're looking at roughly 3.5%, give or take, 3.71 from this high. That was the high before 7,002. And this. So this is going to be the range for some time. And what I am planning to do is that I want to set up a butterfly here in this range. So we'll see. We're gonna do it this month, and I wanted to see um, how we can um, set them up. Okay. So just one, I don't know, we can just rip right back up. Our upside zone targets are this and this. Okay. Showing the bigger picture. This is the whole month that you could make and your downside range, 7,000. Okay. Any kind of a sharp move lower, and then if the price does starting to close below 7,000, yeah, then we will start looking for something, you know, something like this. But it needs confirmation, not just by drawing random labels. It has confirmation has to come from the rotation, has to come from the actual signals, things like this, generals. Like they want to, you want to see the real weakness, unless there is some taco special hits over the in the coming days. That's a different thing. They hit the market with some tweet or something. Yeah, then the risk can roll over across the board pretty fast. So other than that, I mean, yeah, so 7,000, 71, 73, 72, 70. So that's like a 3.5% range, give or take. The market can. If you would have asked me, I think this market just gonna stay like this for the whole summer. That's what this summer I can. There's a lot of look. I know this year is starting to get a little challenging for a lot of people, right? Why it's challenging? Because the market just it's took a dip for 9 weeks and rips right back up in 5 weeks. I get that. This is what most people can literally cannot stand right now. Just because it's such a sharp reversal to the upside. Just well, I understand because this dip right there for 9 weeks was very choppy and sloppy, as you can see. How much overlap the price had, right? So for 9 weeks, that lasted 2, 6, 7, 8, 9, 3 months, correct? So pretty much a one full quarter. And then this weakness was up till here, and the volatility spike that we make these whipsaws with the war news, spike in oil, this and that, right? So we get all that. So went through that phase. And it just, as soon as Pakistan did the ceasefire, markets started to realize they're like, okay, you know what? That's it. The show is over. Even the fact that it's not the official end, but market just literally responded so quick and fast just on that ceasefire that Pakistani laid out. Because markets are forward looking, it never trades on today's rate. You have to remember that. So like it just rips right back up. This is hard because when you positioning something, because it's a dip, fear, market rolling off. They've been ripping from April low. Oh, this thing is gonna come all the way here, and then we gonna buy, and those the BS talk everywhere. This is it. This is it. This is it. This is the top. Like those. Let me just tell you one thing, okay? The most successful traders, okay, who ever lived and whoever are right now, are not the ones who are picking tops and bottoms. The most successful traders are the ones who trade in the middle. Always remember that. I don't care about tops and bottoms. Even the fact that I can nail bottoms. Many of you know I'm good at picking bottoms. Top is very hard to pick. Very, very hard to pick. You know, you can time a downside move. You cannot time the upside move. It's very tough. But calling tops, calling bottoms, selling tops because that's just like that's your own thinking. You're thinking, how many people you think are stuck in these ports they keep adding? Think about it for a second. You know, I'm not saying that like every position that I have perfect. I mean, you gotta have to look. I'm gonna have losses. Next four positions I can open, they all can freaking go in a toilet. I don't know that. I hope not, but I don't know. Anything can happen. Losses are part of the game. They're gonna come no matter what. It doesn't matter what system you have in the world. It's gonna fail at some point. Wave count, swings, rotation, any signal, anything that you put it up in the front on a price, it's gonna fail at some point. Cycle ends at some point. They don't last forever. You know, they're just gonna reach to a certain point. They're gonna start showing exhaustion. That's it. Time to take a little bit of a breather. Look at gold. How parabolic silver went. Look how it cooled off, isn't it? Nobody really talk about gold now or silver. The run because that wild run
Excuse me,
that
Mo.
uh,
So I remember one time you said with the GAN method is the price has to match or exceed time and price.
yeah,
So with this reversal, I think price we passed, but the time is less. So do you think
correct.
with that, then we will look more for upside then?
No, if you have an expansion phase like this, correct,
Yes.
meaning that exceeds it crosses, meaning because price always moves fast, correct? Um,
Yes.
then what happens is once you have an expansion move, your next phase, okay, is where you the price gets a time correction, not a price correction. They call time correction. So the time catches up with price. Right now, if it exceeds, actually, I'm going to show you here. Once it, okay, so here it is. The This was a high 7,002. They were looking at the wave count, correct?
Yeah.
Look at the dip the market took for 9 weeks that we're talking about 9.8%. So this is the dip. We're looking at the wave count when I'm looking at the actual price here with the swings along with the time. This is the time right there. The cycle is going. Even the fact that the price did took this 9 weeks of a drawdown, as you can see, it it doesn't did anything to the price, to the time cycle. Okay, you have to pay attention to the elevation. You see that cycle right now is pointing like this, correct? It
Yeah.
hardly bended. Even the fact that this happened and this happened. This one got a massive throwover. But you see, the price got a throwover, then it got a mean revert back inside. Price and time are two different things. Never ever compare them together. They're two different things. Time doesn't mark the top. Say, like, okay, this is the top. No, the time will adjust to the price over time. Cycles can expand, cycle shrinks. As long as you have the elevation, meaning that the look of this thing is keep right, stays like this, the price will behave in that range and around the time phase right there. So right now, 68.45 and this top, which is 71.40. Okay, this is the weekly range. This is where the time is right now on the cycle. And the price sitting at where? 72.30. So we're out of it. That's why the time signal triggered here that the price needs to finally cool off a little bit and start to coming back down. That doesn't mean that this is a sell signal. You just want to play the full reversal to the downside. No, because this is green background, meaning the swing is up. So the price can extend to the upside, and then what happens? The band is keep rising. It will adjust over time. It will come meet the price. Price will. You always have to remember one thing: price always moves fast because cycles have quick pops. A price can be here on a certain stock, got a massive earning push to the upside. Yeah, I mean, you looking like, whoa, I'm sitting around like, but you see, like that time you're looking like, oh, the then your cycle just literally went to a toilet. That doesn't mean that the price is gonna, because you're comparing to, that's why you're thinking like, oh, the price is gonna stay around in here. No, it will not. It can, and if the price behaves within the time window, it can. But the price can extend, and it can then it can mean revert as well. You see right there on a daily, got the huge dip right there, right? Look how the cycle took a little bit of a bend here, and look what the cycle doing now. See, start rising again. Look at the curve. It's kept because here's a throwover of April sell-off, huge rally all the way up till here, right? Then there goes a sell-off, right? Now, that's the price what is doing inside the time frame. Here goes the bend here on the weekly, right there. You see? But that's still too early. But look what happened here on the weekly. Nothing. So every week when I'm watching price, I was like, I understand because this is daily. That's what all the noise is. This is a real engine. Market trend defines only on one time frame. This, not here. I think pretty soon I'm gonna get rid of all these daily charts as well. As I'm really thinking about it, just completely get rid of it. I just all my watch lists, right? Rotation, signals, that's all the time frame I work on is the weekly. It's the only time frame I look at. I do look at the hourly charts here on one of my monitor, just the intraday price action, just to kind of see, the moves are. It's just less the noise is, better the decision that you make. You don't make emotional, quick decisions. You have time, plenty of time in hand. It's where the most alpha is on trades on weekly time frame. Some of from these trades can last you months, quarters, even years. Okay. It all depends, like if the rotation lines up with the price, and as long as the low holds, okay, because as soon as the low will break, rotation will shift. It will lose momentum as well. So the hook that we're trying to to position will eventually bend back toward the west. So don't confuse yourself. I'm pretty sure I'm just get rid of all this, to be honest. I just don't like, just too noisy, you know, too much whipsaws back and forth. You can actually see here the background colors. Every time when the background is red, it means the swing is down. And when the swing is up, is green, right? Look at this. This is daily. Look at how fast swing changes directions. Down, up, down, up, down, up. You see? Anywhere you change, you see the color change is where the swing was down. So basically what it is like, because these are custom candles, I scripted them. So when you're gonna have a swing up, your candle's gonna stay green. As when the swing will flip down, it will stay red, and then your background will stay red. It's just the visual read. Okay, swing is doing what they're doing, but it's just, you just look at them up on the, you can kind of see like, okay, when the swing flipped, and then right there, that was the last day. That's after this gap, which was April 8th of last month. That's when the daily swing flipped, and it's been green ever since. Correct? So weekly, even the fact that this dip has been coming here for weeks after weeks after weeks didn't really flip until March 20th. And it managed to stay for 3 weeks, 4 weeks, and it flipped here 2 weeks ago. Now you tell me, okay, you want to trade this, or do you want to position yourself here? Which one looks better? Where would you think like I'll be more comfortable trading? Here or here? That constantly, back and forth. This is the thing that I've been trying to tell you, teach you one thing. Just don't marry to these daily charts. It's just the worst one to look at them, the worst one to trade off. Fail signals all the time. Failed rotation, faster swings, faster signals, flip back and forth. Weekly makes the trend. That's where the real money gets made. Big long-term leaps, big shares, institution positioning. It's all here, not here, not on a 1 hour chart, not on a 15-minute chart. I have a lot of experience to take advantage and learn from it. I'm not teaching you BS. It will benefit you, and it's gonna help you. So it's funny that nobody kind of thinking about yesterday talking about JP Morgan collar anymore, huh? They're getting toast. The collar that they put it on. How that collar is playing out. Don't, like, oh, they did this, and yeah, this is an order flow. Yeah, it marks the pretty huge block where they cap the upside. Okay, and then from there, when, yeah, the hedge that you put it on, okay, it just going in crazy. What they capped them at 68.50 or something like that. They capped them here. Okay, so uh, I understand it's a quarterly, and they capped them somewhere around here because against this dip. They were looking for lower high like this. So they bought the down, that's the tail right there on a collar. That will explode big time if that happens. But that's not didn't happen, but look what the price is doing. And they're getting killed right now on that collar. Trade is a trade.
Well, I have a question
Yeah.
about daily versus weekly. You said that you're going to get rid of daily. Why do you do that? For example, like fast mover momentum stocks, if you're just looking at the weekly, when the huge momentum is already done, maybe weekly you're not still seeing the weekly buy signal, trigger.
Mhm.
So, for example, like I'm talking about like optical super cycle stocks and so forth. If you're just to look at the weekly, you're not going to be able to get in,
Correct. This the daily gives you the timing. Okay.
Yeah,
Daily
exactly.
gives
Right.
you the
So
timing. Weekly gives you the trend. So your position is going to happen only one time, correct? On any stock, unless you're planning to add more to the upside or you plan to add more. I'm not. I don't do that stuff. I open a position one time. This is my position. That's it. You know me. I don't add stuff. I don't add anything to positions. It's just to me. I think that's just a dangerous way to trade. You might get lucky by averaging a position down, but the odds are less than 5%. You're just forcing more capital on this thing to turn around because you want to bring your cost down. Daily is timing. But my point is like I am opening positions not on the day. I do trade daily, these quick moves like I do. Either I'm gonna grab them on the hourly chart, but my main focus is not. My main focus is weekly. This is where the trend is defined, not on a daily chart. Market can dip down the, let's say from here to here. You think it will change anything here? Daily swing was down here. Anything happen here? So you said like, okay, well, daily is down, but weekly is up. And you'll be thinking like, oh, what should I do? Happens all the time, right? Here I will show you this. So XLY, week. Daily is weak. Weekly is weak, right? This is where the Amazon and Tesla is. It's a weak stock of ETF, XLP. See? So when you look at stuff like this, so how you want to position, say like, okay, well, I want to position now on a daily time frame because daily swing is up, but then at the same time, I'm looking at the weekly swing is down. How you want to position? This is what happens when you look at two time frames side by side. It gets healthcare both down. Industrial weakening. Yeah, this Caterpillar is I know it's just the one who did the move. It's not gonna give the because that's pretty much the top leader for industrial. But see, it hasn't flipped yet. And I'm gonna show you what's going on, which you guys gonna she was going to change your view in a second. What you actually looking at the market? There are very handful of stocks that are actually showing some strength because the rest they're not ready yet. Okay.
Yeah, like industrial stocks in the AI data center ecosystem, for example, like a PWR,
Yeah.
Quanta,
Hmm.
it's like they are just flying. Quanta, has been flying.
Okay. Yeah, I mean, because of the, all the narratives are catching up, but it's just like the Tesla down, down, you know. I don't know how we squeezed two trades this week, to be honest, on downswing. I'm just, I took it. Well, we'll see. It's not ready yet to explode. No, you know. Look what happened. Tesla put a low here, huge pop, weekly, right? Candle one. Inside week last week, candle two. Look what they did this week. Put a low. So that doesn't count. So it just kills the sequence. You need three higher highs, including the inside bar. One, two, you see? Doesn't want to give that 3 week sequence to the upside. That's why it just has been down since since January 20th. It's been red. Okay. It's weak. Now you take this, is putting all the pressure here. And then at the same time, Amazon is the only one is trying to save it. The XLY top leaders are which one? Amazon and Tesla, correct? So Amazon, I'm going to show you something, probably gold. Here's a story on gold. Gold swing is
Okay.
up, right? Gold swing is up, correct? So gold has one down week, second down week. So there goes the buy signal that triggered this week. Now, in order to save the weekly swing, it has to hold the low of this. If next week, if this low breaks, this weekly swing will flip. So meaning that this red will extend if it failed. So then you right now, this is the high, this is the low. At this point right now, this is a lower high here. So what happens is the third week is called the defensive week or defensive month, right? Big stocks, like even gold is the commodity, like gold and like the Mag 7 stocks and the ones they're like the big ones, they fight on a third week or third month or so. They don't give up that easily because the monthly flip is flipped. It's just then you just get the um, counter trend moves, and once the swing flips, it doesn't instantly reverse either. is gonna take time, because you can see right now where the price is. Price is between this cycle. So it has a pressure right now because it's trading on a time cycle in this range. An uptrend will live in this range. You have to pay attention what I show you, where the price is. Okay? Swing is down, price is trading in this range in the cycle, in the time window. When the swing is up, price will start moving up to this zone. So you have two zones at the mid. That's what the time cycle defines. Upper zone, lower zone. So when the stock is under pressure, it will show you how much time the price is going through. Here's Oracle. Oh. Here's weekly, right? Watch what happens here. I don't know if you guys have ever seen this. This is called RIC, Relative Index Comparison to an S&P. Okay? So a stock, when we were looking at around the rotation graph, it in the universe, it's where has it been circling around? Benchmark is what? S&P, correct? So you check if the stock is outperforming the benchmark or it is underperforming the benchmark. Where does it loses the relative strength against the benchmark? So it's underperforming the benchmark. Underperforming means that the rotation is weakening or starting to go into a lagging. How long does it stay there? The relative strength will prove you that. So then the price cycle will do the same thing as well. It has different settings, but these are my settings that what I use. Okay, there's many ways you can flip them, where you want to change them, where you want to start the cycle, this and that. There's many starting dates on that one. So Oracle on October 31st of 2025 of last year, starting to lose the relative strength to the benchmark. Okay, so the real weakness of a stock triggers here. Okay, at that time, the price was on the upper side of the cycle, as you can see. This is the time cycle, correct? Mid, upper, and lower, correct? They have three ranges. So this is where the relative strength starting to lose. So one of the software names. So once you start losing relative strength, that's when the price starting to get under pressure. The swing is already down, correct? So stock will lose relative strength when the swing is down anyway. It cannot lose it when the price is up or the swing is up, correct? It's a common sense. So you're losing relative strength while the swing is down under pressure anyways, because you see all this all red. Weeks after weeks, the relative strength is weakening. So does the price starting to weakening as well until here. Then here goes your bounce, a short-lived bounce. But that's not a viable bounce yet, because you see what the relative strength is doing. You see this green? It's going to change with that color. It's going to match that color. See? That's just a counter trend bounce. Nothing to that this doesn't say like, though this is the low right there. I should load up. Swing flipped again, turns red again. See, and then look how much weeks, months from here. All you have to do is just count 4 candles, 1 month from here, right? 1 month, 1, 2, 3, 4, 2 months, 3 months, just 3 months. So 3 months from here, 3 months. Think about it for a second. That's a long freaking time to sit on a position for 3 months. No, some people cannot handle that. First of all, I know that. Some of you people are so damn emotional. Tomorrow market dips 100 points. People, half the people will literally flush out their accounts, or the other ones are just start wiping out, closing out their positions. They cannot handle a dip. It's just a fact, anyways. So right now, it's not near the zero line, anyways. So any kind of an upside here, yeah, I mean, when you're gonna look up on a 15-minute chart, yeah, the Oracle pops 7, 8 points. Okay, fine. Yeah, it will move. It's not gonna just stay down every single day, right? But it's not even near close to this yet. Okay. What I'm showing you here is you're not gonna find them anywhere in the world, I can tell you that. It has a declining time cycle as well. Okay. It doesn't mean that the price cannot pop 20, 30, 40 points. It can. And when now the swing is up, right? So now it has the potential. The price can make a move a little bit. It has what, 2 weeks, 40% move from this low, right? So it made a pretty decent recovery so far. But that doesn't, it's just like, oh, you don't have that confirmation yet. Relative strength is weak. RG doesn't have the confirmation. But you said like, okay, well, buy signals in, it should load up. You can, these kind of a positions, you don't size up. Let me tell you how you buy low. You buy low with the half size position. You don't size up a position from a low which has this kind of a landscape. You add to it when the strength confirms. So most of the time, that's what as I said, most of the time, I'm way more comfortable buying shares anytime I want to open up a position. And then from there, once you will have confirmation from a relative strength, and it actually showing strength here based on the RRG, you can just roll up a freaking spread to the upside. Let those shares ride. They're coming behind it anyways. So you have a position open, Positioning is one thing. Attacking one certain position. Oh yeah, I just want to throw 3 grand on this one. This is it. This is the low. I'm in. Read what the price is actually doing. You will know the difference. You know, which price is extended, which one is not, which one is holding a most relative strength. Like, you see, what is this? NXP, whatever. This, but some earning pop, I believe. Like, look, it's some because we're in the earning season now, anyways. So it's just good relative strength here. You know, the a good one is always gonna be once it crosses above a 21 moving average. You see, price is trying to stay just a normal price action, just dancing around between the time window, lower band, mid. This is what it closed yesterday, and the upper. Just like a little small range bound stock, CVS catching up. So you can see, so I really don't want to show and start posting because there's going to be most of you, I will just have one screenshot. It will have all the information and that's it. So my um like somebody would have like, hey, could you look at this stock, this, and I know many of you are always like that all the time. Just gonna take one screenshot, post this thing here, put up an RRG, and I can show you a same stock, what is doing relative strength. This is it. Okay. One chart, you have relative rotation graph. You know exactly of how the stock is doing onto the benchmark. Okay. How the relative strength is holding. And you have a swing that tells you exactly the swing is up or swing is down. That's all you need. I'm really like moving just to this kind of a nothing else that I need to trade, to make a decision to what I want to do and what I don't want to do. You know, a swing can turn. That's where those tier that I talked about, the tier three, okay, is where the relative, the build phase is. So now if we look at this zebra, right? Okay, let's do this. So you go here, open this, look at this. So now you tell me swing is up. So swing is up. I should just jump in because it's looking too damn promising. Because it has a freaking declining band for freaking months, quarters. It has lost so much momentum to the upside. Look at that. You know how many months it's gonna take for this thing to shift like this? Think about that. Weaker relative strength. This one is 88. It's like right at the peak of the bill phase. Because 80, anything below 85 is just sort of like a pure garbage. Okay, it's showing 88 right now because the swing flipped. Okay, so it's in a very, very early phase, but it's just not something that I'm comfortable throwing money into it. Even if it's like, okay, yeah, it's a good company, has a good potential. What should I do? Should I attack with the option? Yeah, you can open a small size spread if you wanted to. It's not like something that I want to start off with a full size position. See, positioning is one thing. You just have to learn that as well. You positions based on what the price is showing on a cycle. You see, does it have relative strength? Does the RG looks good? Should I size up that? That gives, but that doesn't mean that's like 100%. This again, in the end, it all comes down to one thing: is a probability game. Everything can look perfect on the board, but anything can flip as well. You have to be careful with that. Just do your best and never ever risk more than 2%. Anyways, that's just should be a hard set rule. Don't cross that line. You can play the game as long as you have the capital. So the couple of the numbskulls who left are the ones who blow up their account, because they went too crazy. So it just the The yeah, positioning is very important. You just gotta have to see it. Never size up a position at the bottom. Mm-mm, don't do that. If you take you like this stock right here, right? Okay, let's do it here so I can have it. Don't ask me too many in the middle because I'm always doing something and do all this. 90, right? So literally it's starting, okay? 90 is like right starting to move into a tier two phase, right? It is weaker because of this hit that it took, but on a time cycle right now, where would you structure a trade the on this setup? The structure would be defined here. This is a range. It's still weak because this is weak. So this will confirm it lost relative strength here and it's been weak ever since. So it's underperforming the benchmark. The swing flipped. You just match colors. All you have to do just look up and down. Everything will confirm to you it will give you a pretty good visual view. What are you exactly what you're looking for? Should I jump on this one? Not really, not yet. Could be a potential in the next week or two. Yeah. Keep an eye on it. But healthcare overall sector is the lagging sector right now. Right? So it's just like these are the things you just gotta NVIDIA. This is such an interesting chart. Watch what happens here. First of all, the stock is just sitting near the benchmark, right? And it's very choppy, as you can see. So look, these are the weekly swings, first of all. Okay. That how often that they flipped. You can see it here as well, right? The market that took that 9% dip, that's the and look what Nvidia did for nine the for the um since this high. So here was the high of Nvidia, right? Starting to lose. This is actually a time starts here, counting 6 months. And then from here, it just choppy, just went sideways, correct? That time, of course, when the S&P is down 9%, so there's going to be a lot of stocks will be basically will be out, will be below the zero line anyways, right? Because you have the overall market is down, like tech is down like 12, 13% off the high. So it's not like man leader is going to be rallying. So anyways, right now is what they did. It's like this is a huge liquidity. Look, this move from here to here is 5 months. Think about it for a second. This is 5 months of sideways chop in this stock. And how many of we haven't traded NVIDIA in a long time. How many of them got clipped in this kind of a chop over the months? Think about it. back and forth. Even weekly don't even flip that often. You can see what this is a stock like Nvidia flipping like a freaking like a penny stock. So 5 months of sideways grind went up, can put a wick, full reversal. It's crazy. People buy breakouts when this job ends because you had a huge move, expansion phase. That's your compression zone, right? Compression phase right there. Price just literally just went sideways for 5 months. Relative strength got so damn close near the breakout. Look at that. Man, they just that liquidity zone right there is kind of that's a tough one. A stock like this, it's struggling to break out. That's just not gonna be a good sign. Not gonna be a good sign. This is the top general. We all know that. Second now is Google. You know what? I don't know. To me, what it looks like is this that they're letting Apple run, Google run, Amazon, they're holding this back, as a backup. And then they kind of cool off. The sucker took off. You see? They're not this year you have if there's one thing I'll tell you. If this year you didn't learn rotation, if you're not gonna pay attention to the rotation, you're not gonna make money this year. Mark my word. Okay? You have no idea. You have to pay attention to the rotation. This market is all about rotation right now. If you don't understand, if you're not gonna learn this, you're gonna have a very, very hard time positioning. You're gonna have a very hard time making money this year. This market has shifted like I'm gonna show you this. Watch this. What do you see here? Look what the market is doing actually.
Only technology.
Huh?
Only technology leading the market.
That's it. And what it was before, other way
Technology
around.
was technology was down.
Yeah. You see the shift right there? This is not the broad market strength. Look, all these materials, consumers, they all defensive. Look at healthcare where it's going. That's why healthcare is so weak. Look at financials, weak. XLY, consumer discretionary, weak. Communications, see it right at the peak of benchmark. What this and Google is, how long the Google is going to hold it. Meta is down, Netflix is down. These are the top three. Real estate is losing. Utilities is losing. They're all losing momentum now. Look, we can filter it. Weakest one is financials, consumer discretionary. These are the ones that the leaders, the energy. Look, 115. Crazy how it went up. Technologies were 99.9. That's why it's right there. It's blue. Back to the same thing. What moves the market? Generals. So they're very selective names. They're moving. This move is pushing up. Look, technology is on one side, the whole sector, which is there are 11 of them, 10 of them are on the opposite direction. So then what is going to happen is that technology now is gonna push, run its course, rolls down again, and then the other takes off. This is a totally opposite. This market either need a full reset, meaning that it needs a pretty damn sharp sell-off, okay? Or either this market has to kind of go extended more kind of sideways for some time for these sectors to catch up. This rotation has to adjust. This is weird. I know as many years I've been following markets and trading markets. I haven't seen something like this that only one side of the group sector is on the totally different world compared to the other ones. I mean, yeah, communicate. I mean, then you looking at the individual stocks. The individual stock, you should be focused more on the leaders. You see, like I'm trying to buy software names, right? I'm trying to buy which name? Microsoft first, right? I don't. I'm that's if you have a sector weakness, you which stock that you do the position, you do the leaders first. Start off with the leader because they're the one who's going to recover faster than the rest of them. You know, it's weird. I'm watching week by week is just the way this thing is like, yeah, it is look, it's strong, okay, as in, but it's the upcoming weeks, yeah, that's it. I mean, it doesn't mean that this thing cannot reverse. It can go right back up again. It can stay another several more weeks like that. Then it can eventually come back down. We don't know that. That's, the thing is like this updates once a week. Okay, so you're talking about right now. So if we're playing strictly growth and we just only focus on technology. I wouldn't be even, I'm not even looking at any other sectors to be honest. Just stick with technology. That's it. To just go back here instead of S&P 100, go to NASDAQ 100, top 100 stock. That's it. These are the names. And we just go through them to see which one has the potential. Ziegler right there, ZS right there, weak, big. I mean, it can bounce, you see? Look how much is, I mean, we have a trade open now, is almost break even. I'm just trying to play a small counter trend move. It's not like I have a massive size position on them. I will never do that. I mean, I'm just trying to play a small counter trend move. If I can get this to here, it just watch the ribbon. This is the trend follower. Your ribbon is green and either is a red, which I'm talking about this. See, it's all red. When it's all green, the kind of trend filter what the price is doing. This is then below here. Swing is down. That's the swing. That's your trend indicator, what the price is doing. It's very hard to, if we're trying to play a small counter trend move, you don't size trades here. You size trades here. It's a difference. PayPal, see? You just follow the trend indicate the time band is there. I don't want to confuse it with too many things. I just the way what I want what I wanted to see is here on one single screen. I have price, I have time, I have trend indicator, I have relative strength, and I have rotation. That's it. That's all I need for just to analyze a stock. I don't need labeling. I don't need cycle. This is my time cycle right in front of me. I don't need to label anything, to be honest. I need one chart and these things that I want. That's it. I know that the momentum that I'm looking for, what I'm looking for, you see like a trend, like the ribbon that you're looking for, you can see like price goes up, back down. It's just because of this weaker relative strength. Let me the strategy is here, trying to work his way out, as you can see, but look, the thing is this, like most of you guys look at them charts. I don't think that anybody doesn't really pay attention to the actual time that how long has been is taken for this actual swing to stay in place. Like this was right there, 6 weeks. B6. You see, that's why that's your real time right there. How long actually the swing lasted. 2 weeks down, 3 up. So what is the rule now with the time? Even if the price exceeds in a shorter time duration, right? But it has to exceed more on time. If the first swing lasted 6, this is only 3. It has to go up 3 more weeks at least to match 6 by 6. That's going to be like the bare minimum time frame. Okay, this we call equal measured swing. It's not the percentage move is one thing. Percentage is like, okay, this is the high, this is the low, this is the high, that's the higher low, and then you have a higher high, right? So you have the swing going like this. Okay, good. So how long should I stay in a trade? Well, you only 3 weeks so far. When you went up 57% against the 43%, you already exceeded the price move, but you haven't met the time yet. It's two different things, right? So you managed to get the measured move, 46, 46 off this low, correct? So you got that from here to here to here to here. So this one went 57. This one was 46. You got that. This was 6. This is only 3. So this sucker right there has to stay up for another 3 more weeks to at least match minimum 6. If price from here fails, okay, well, that's it. But there's going to be an answer. How do you know that? So this resistance that you just broke will act as a support here. Price now is trying to make his way out from the trend filter. But the trend is, you see the red ribbon eventually turns green. This crosses above. That's where you're going to see the real strength comes into a play, that this downside right there will take a, look how long it's been down. Almost a half a year. Very read how to read a chart. There's Microsoft. What do we see? Weaker relative strength, correct? So we got rid of this. We put Microsoft here, 88. So what is the 88? Tier 3, correct? So even the fact that looking pretty darn promising, right? But it is in a tier 3 phase. So tier 3 phase is what? Put a low here, struggling where? The last 3 weeks that I told you about, right in the mid of the cycle. That's why I closed that thing. It doesn't mean I cannot go back in. We will. We're gonna watch, and then we'll try to play play the upside. But it just, you see the curve, you know, it got work to do. It has to prove something. To me personally, I thought that Microsoft was gonna freaking rip on earnings. See, it didn't happen. Why? Because it has lost its momentum. It doesn't have a promising upside. Weaker stock will look weak on a picture in front of you. So that's why we don't have to force trades on those. Once you this is different compared to this. It has work to do. I understand it's a most important company. Everybody loves Microsoft, right? Money they're invested, but it's just going through a declining cycle right now. So it has work to do. That's all I can say. Marvel, strong relative strength, right? See, price trail above the trend filter. This just I think that this chart alone, other than the other one that we use for buy and sell, the buys and sell comes here as well. I have two framework, so you don't have. I mean, I take trades on both sides. This is more structure based, like pure swing, timing. You have way more in-depth details here compared to thinkorswim. Thinkorswim just pure mechanical um, signals. This is the real framework. Okay, this is called it's a top of the line analysis of any stock that you wanted to see. You have a trend filter. You write the trend filter up, it will confirm the upswing, downswing, so it'll do everything for you. See? You're gonna get the bit of a pullbacks and stuff, but you see, you haven't flipped. You have a trend filter is telling you one thing, relative strength, still strong. See? Cooling off, this is what the cool off phase is. But this price is behaving. Look, put a low here, reverse, right, sitting right in the mid. So time, price, relative strength is neutral. Everything is it's weakening because of the pullback. So the ratio is 1:1. But it's on a different opposite side though. So it could be eventually like this. That's what the odds are looking pretty good for this thing to go like this. Because the upside strength is not being confirmed here. That's all. It's a very detailed, well-defined um, um, screenshot on any stock. I mean, it's gonna totally change your view of looking at a price. Okay, we got a Meta, right? Losing relative strength. Even the swing is up, behaving. It's just Meta is just range bound. That's all it is. up and down, and is behaving well, pretty well in within a cycle, right? You can see all the highs and lows. It's just the stock is just, to me, it just stays sideways. Narrow, very narrow swings as well, right? So you see swing one, swing two, swing three, deep swing four. Now he's trying to do five. This is, to me, this monster run that Meta had. Is this some sort of a triangle that the Meta is going through with all this capex spending? I'm a very strong, like, I can see this is some sort of a larger degree triangle is in play here in Meta. So the start be once this swings will start lining up that close. I know the technical world. Okay. It's gonna go like this. So you just basically is an A, B, C, D, E. Then from here it has to build up, show strength to the upside. It's not gonna the stock is, this is positioning here with shares, not with option. Option is gonna kill you in this kind of a range, being directional, sitting on Meta. When you have such a narrow swings. This is, I cannot say 100%, but it's just is this run that this stock had, okay, or from this low, whenever it was 89, and then it gained relative strength over time, meaning that it recovered. It just going through a sideways choppy phase. I was looking at the S&PS, yes, that's the go trade right now. This one, CNS, CDNS, yeah, these are go time. The CR, what is that? Energy, CRG, yeah, CER, no, what the heck is that? I'll show you. Just focus on these names here. This, no, I don't know where it went. CEG, yeah, CDNS, right? This one. This is under the music signal as well. See how relative strength is catching up? Swing is up. Yeah, this is a go time. This is gonna break out. How pretty. This is a third swing as well to the upside. This is gonna go. Looks pretty good. I will send you you don't have to jump on this one, that one. I mean, you're talking about positioning that just in a tier one phase is the one that you want. You have to categorize your risk based on these tiers, based on this rotation. I know that everybody is looking for these wild moves. Okay, it will come. Okay, it doesn't come that often for everyone. So don't have your expectations way too much. Amgen, weakening. I was watching yesterday. Took a hit on earnings. See how it's starting to lose. Had kept his relative strength pretty good, but under the trend filter, you see like yesterday swing is down. So 314 right there. So it's backing off. I don't wanna stock. It's a strong stock. Plus it's a Dow 30 stock as well. So app loving, choppy, range bound. See, trading within a very choppy from the last several months. Just sitting on the lower side of the edge. No upside until you break this 500 kind of range right there in the mid. That's when you look at the upside. So it's improving, trying to work. We're not showing a rotation. But again, I'm not gonna sit here and go through all 100 stocks. Okay, we have the filtration system. Filter is gonna do all the work. Go here, pick only, so we just only focus on this 100. I named them early leaders. So there you go. All the other garbage is off, down to 25 names only. So now from here, we open RG, go to the weekly. That's it. So these are here. App Lovin is there as well. So, okay, now go from here. Amazon, of course. Apple is good. S&PS, yes. This is the play. This is a go one right there. 96.7. Go time. Go time. We go here. You can do is actually trigger. Wow, it triggered a go signal yesterday as well on a weekly bar. So you have this. That's how you fit your odds. Relative strength is getting better. Swing is up. Rotation is tier one. You have a go signal in the weekly. And you have this. Any pullback or setback here is this. I don't. What company is that? I have no idea. Hey, what did they do?
It's a design company, chip design company. It's a partner of NVIDIA.
Oh wow, they design chips or they
Yeah.
make chips.
No, they don't make chips. I think they design chips to get, and then in Synopsys is a partner of one of the partners of NVIDIA, so as the CDNS.
Oh, okay. So this is because ASML they make chips. Okay,
Yeah, ASM is a chip equipment maker.
okay, yeah. Because I have the GFS as well. Okay,
Yeah,
interesting.
GFS is a optical wafer maker.
Okay. I know you all into these names.
Yeah, I
Yeah.
am. I did spend hours doing all the research because I missed the run, and I was like, why?
Well, it's again, it's you gotta positioning happens like this. That's what I'm trying to show you. Okay. Tier one, rotation confirms, structure confirms. That's it. You open the position. Then sit back and wait.
So,
You
Mo,
know,
I am wondering, you have a very powerful system, and maybe it is the scanning criteria you said that why all those, optical names and the memory names, why they didn't come up in your scanner?
because I don't scan them because they're not in the S&P 100. You have to look at what you're scanning though. That's the
So
thing.
how can you pick them up then? Are they, well,
You
MU,
have to go.
SDX, S,
Uh,
SanDisk, they are in S&P 500. So was Marbel and but other stocks like AAOI, Credo, I'm not sure if Sienna is in it. I think Light is in S&P 500. But but it was added Light was added into S&P 500 recently, I think. So I'm wondering, because I would love to, you know, buy those stocks at the early phase of, like, exploding.
well, the
And
early
how
phase is
you
this.
how you
Mhm.
can how you can change your criteria to pick up those, early movers, which have a, potential of huge upside, 100%, 1000%. Like STX, I think it was STX. It was up like 1000% over the 1 year or something.
Yeah, but you have okay. I totally get what you're saying, but you have to. You have to look at the picture. This MU, Mike, it's been running since last year, since April low.
Yeah, but it was never too late to get in 248, for example.
When this rotation lined up here is when the structure build. Is this when you open position? I mean, how far does it go? How the narrative changes, fundamental story changes after months, after a year? Well, yeah, I mean, we're seeing the result. Nobody can predict these expansions. I understand they look beautiful right now because they're getting so extended, but look where they're coming from. It's a $73 damn stock, $80, $85, $90. Now it's $545 stock. Come on. It's like, how can somebody can even predict? I mean, yeah, I understand the demand went up, battery, memory, all that kind of stuff, everything like just a different phase in the market. I totally get that. Okay, last year AI came, right? What happened? Every software names were exploding left and right, isn't it? All they have to do is to mention, okay, AI in their earnings and stock pops. How many did we saw? So many of them. They were like all into a demand, like, oh, demand is going up in AI, this and this. So when the reality is starting to face now is like, okay, now it's all about spending, right? Software rolls over. The threats start coming in. Cloud, okay, they're gonna destroy these software companies. We don't even need them. What's the point for them to making these software when the cloud can do all the work? You see, pressure comes. Now the rest of the companies saying that the demand is so damn high, we're gonna spend billions of dollars. We're gonna spend even more now. Every earning, they're increasing their capex spending even more and more and more. Look at Meta. All they got. That's what I said. And now you have to look what happened last year. You mentioned AI, stock rips to the upside. This phase, all you have to say capex one time, your stock get destroyed. This is what it is. All they have to do is just to say capex. That's it. Last year was just the word AI. Stock is going to take a freaking 20% plunge in a matter of seconds, only because of capex word. Last year was AI. So everything from there now, all the software names got killed, which we all know, correct? Because of that, Microsoft under pressure. And then at the same time, all these hardware and memory stock, they're running their cycle. They were all dead here last year. They exploded this year in the first quarter. So they're basically taking all the money that they're spending now, that the money is going into these names. Okay, that's where the hardware, that's where the thing's gonna get built. Yeah, so technically if you draw the cycle, yes, it makes sense. you know it's a different phase, whatever. If this is the one data center right there goes a company, AI demand goes up, correct? And then they have to build this. They're coming off these software names and all the other ones, right? So now these other software companies start spending money here. That fires up, because I gotta name them all different. That fires up these hardware infrastructure names. They're the one who's gonna get their money from these bigger companies. Now their stocks are ripping to the upside, and these ones are the ones are rolling over from last year because of the spending now. So stocks are being punished because of their spending. So this spending, what they're doing right now, pouring into these hardware names. So once these hardwares and stuff, the data center will build, the demand will be gone. So they're getting hot right now is because in the building phase, they're in a spending phase. They're taking because they need to pour money here to build the data center. So when the whole structure will form, CPU, all the memory, optical, the cables, everything will be all built, demand will slows down. They will stop spending money. It's like a building a house. So you're building a house and you're spending money on the material. Once you have a secured roof, once you have a house is built, what is left in the end when you move in? You need to get furniture. So all the capex spending right there, what we are trying to invest, what you're looking to invest is like, okay, they're spending money to build the data center. When these data center will be built, are this money will pay them off. So they're doing a house renovation. That's basically what it is. All the generals. So on this one, the only top name which is actually doing the best job is Google. This is the only one that is leading the whole entire pack in the Mag 7. Because NVIDIA just been sideways on the last 5 months. We saw that. Even the fact that NVIDIA, we all know the story of NVIDIA. It's a very interesting cycle. I get that. But we're just trying to catch every cycle possible, that every turn. Well, it can, it might, it can happen, and you're not going to catch every single thing. It just doesn't work that way. So just like if you think about it, is one side is spending, other one is taking advantage. So once that get built, well, demand slows down, and then okay, then they will see all the money they're spending now. Is it gonna pay them off? Meta is not an expensive stock. I said the same thing last year about Google as well. But again, do you guys even hold Google? You don't. I know you don't. Because you just want to book profit, take money, and then you want to wait for a pullback to go back in. You can't do that. I alerted last year on April dip, right? What did I buy? Google. What else did I buy? Broadcom. I clearly, literally said, like, okay, I'm buying 75 shares of Broadcom. I'm buying 75 shares of Google. I mean, how you think I'm going to be able to buy Broadcom for $175 again? I don't think so. Why would I close the position? It has potential. It's a great company. You know, just let the thing work. Good companies get good, these are very, I mean, Broadcom's Google, my Google position is up like 24, $25,000 now, 75 shares. Broadcom is up like almost close to 25 grand as well. It's almost 50 grand. It's only two positions that I've been holding since April low of last year. Maybe we'll bottom. I mean, it's not like I never caught a big run. We do. But here's the thing though. These memory stocks and these optical cables and all these stocks, they're not here in S&P 500. So that's why they don't show up here. So if it doesn't show up here, I don't follow or chase those stocks.
And how can you how can you pick them?
You
Which,
have to go, I believe, in the full 1500 scan. It might be here. On
I don't think all of them are even in S&P. Okay, I don't know which group they are.
Some of them are in mid
But
cap.
Mo, you
They're gonna
are
move.
100% right on ABGO Google. They are the leaders in
Yes.
AI inference space. So I really appreciate that you picked them early on, and I made a lot of money. It's still a paper game, but I made a lot of money. But you know, we have to take a look at those foot soldiers, plumbers and electricians. If the Google and Amazon are the general contractors, those optical memory chip makers, they are like electricians and plumbers and those subcontractors. They are
Mhm.
making a lot of money because general contractors are spending a lot of money. They're taking a lot of orders.
Yes, yes, that's what I said. I just went through the cycle. One is time. Last year, the AI boom started. all these software names and all the, because that's when the market had a big, huge melt up, right? So Nvidia went crazy. Nvidia went crazy. Market ripping to the upside. Nvidia, just I remember it was like fifth, sixth, like how it creeped up on a market cap, and then it just went over Google, went over Amazon, went over Apple, Microsoft, and then lead it all the way to the top. And it's been sitting on the top for a very long time now. It used to be an Apple for who knows for like almost a decade before, the most valuable company in the world. So NVIDIA demand went up like crazy last year. Software names, now these ServiceNow and all the other software started running toward NVIDIA, signing up partnerships and stuff. So all these softwares now, after this cloud and stuff, they just start getting hit hard. Because the thing is this, like these, if you look at them, like we can just do it this way. It's a cycle. It's all it is. IGV. Let's just do this. Let me show you Microsoft. What else? Oh, Microsoft. What do we have? Oracle. Who else is it? Can you name me a couple more? What is this? Palantir. What other software do we have? Yes. Adobe, IBM. Okay, that's a couple. Sorry, the top ones basically, right? So there's a bounce coming on these software names in the coming weeks, right? I see that. But if I have to play the upside on any of these software names, we'll get to the hardware in a second. I only focus on these names. Why? You see this IGV? Look, Microsoft. Look, you see, they hold hands to each other. So when you want to buy something, on a sector, which let's say as one sector that you see has a drag, which is software, which we all know that, right? If you wanted to buy something, you always attack the leaders first. You want to buy this rat and this rat, or even this. Watch which stock actually follows the ETF. Okay, these are because this is the leaders are the ones is gonna push this ETF up. Remember, we talked about generals all the time. Generals do the work. This is not in, these are not generals. These are little soldiers. This is the top generals right there. Call it 3 star, 4 star.
Can you add crowd and PA, Palo Alto network? Because Palo Alto network and the crowd are supposed to be only two partners with the Anthropic Mythos.
What's the ticker for Palo Alto?
PAWN or PANW?
Yeah, right there.
Yeah,
You see, the
yeah.
thing is
So
this. Now, what is our go time? 95, correct? So where we are now in a 90 phase, is ETF is going to work a little different because it doesn't have alpha like stock does, right? The idiot, don't confuse that. That's another thing that I learned. You cannot compare. Um, it has a different tiers on ETF because ETFs don't move 40% in a 1 year, So these are the ones right there. So on this one, on a weekly, right? Microsoft build phase. Palantir, strong rotation. The only risk does it have? Monday earnings after the bell. Crowd strike 90, strong rotation, strong. You see, I don't care about IBM. I don't care about Salesforce. I don't care about Adobe. I don't care about Oracle. Leaders. It will tell you right there, even the fact that they're all there in one sector, right? Look which ones are the ones that picking up fast speed compared to others. See? This is the thing you have to understand about it. Generals do the work. These couple handful of these names, these memory stars, and they're not gonna lead, well, yeah, it will push the semis. SMH, yeah, SMH is gonna push NDX up. It's just the way this entire market moves. Is just I don't think that people really actually understand the full concept. What actually drives the market? It's not the tech has the strength. Yes, we get that. But when you compare this, okay, it's just a totally different way when you say like, okay, if I want to buy something, what should I buy first? That's why you see me on I'm only okay, I'm trading Microsoft and I'm trading Palantir. I don't care about IBM, Adobe, and all that. No, those are weak rats. Let them die. Who cares? When they're gonna recover, ETF is gonna recover with the help of Microsoft, with the help of Palantir. It's not gonna recover with the help of freaking Adobe. They're in a lower category. That's the difference you have to see. Back to your hardware thing, and we're gonna cut off. The I think 1500, man, is gonna be. I think they're sitting here. I have to um either I have to look them up to see where those hardware names are, unless they are here. Hang on, do this. Okay, we go. I don't want to do breadth US equities, technology. Can I make this thing big? Okay, semiconductor, electronic components. We can do that. See, you can do computer processing hardware. There you go. So we could do. So you have to think. You see, I don't do this scan though. This is the thing that I I like to trade quality names. Okay, I don't if a cycle phases on a certain like what I don't know, like right now it's in a memory stars, hardware stuff, right? I don't really particular follow that because these names are first of all not in the S&P 100 category. Those are the top 100. For me, I love 50 names, Russell 50 index, the top 50 companies in the world, right? If I cannot find anything in 50, I will expand to 100. Doesn't really good anything in 100, I'll go to 200. That's it. You know, like lately, I'm like stopping myself right at that 200. You go to an S&P full 500 scan, and it just so much stuff pulls up. Then you gotta sit down, filter, go through them one by one. It's great. 200 top quality names. 50 is the top one. Let's do. That's why none of these smaller companies that they're gonna show up over there. Okay, let's do this. So we do this. Here's all semiconductors. There you go, sector. There you go. Well, the other one's not going to show up. Here, QRVU, I was looking at this. Here's Qualcomm here.
Yeah, Quovo and Skyworks, they are the laggards in the optical ecosystem. And the Skywork are merging with Quovo, and their merger is under review right now.
Here. Oh boy. Jeez. It already hit 94. That's crazy, man. This is why I
Another crazy one is the Nokia. I thought that Nokia was a cell phone company, but they quietly changed, into an optical name.
wow, this stock, man, I did this thing 2 weeks ago, not 2 weeks, 2 days ago when I posted this thing after the. This is why I don't do this after the close. I'm gonna make a wave count, and next day the thing is up like 7, 8 points. It's just like, I'm like, come on, man. It's just this is a really nice chart, if you ask me. Okay, you have a clean 5 waves up. One, two, three, four, five. And it will have a throwover, which is fine. And there you have a setback, choppy WXY. When you have an extended Y, remember, you're going to have a shorter Y. Sorry, when you have an extended W, you're going to have a shorter Y. Okay, it's either or. It's always like this. When you have a shorter W, you're going to have an extended Y. So in this case, was this side was extended, this was shorter. Reached YW at 100. But this thing works really good with fibs. So now I already tagged 94. Next is 106 and 120. If this thing breaks above this 106.30 pivot, really nice round bottom pattern though. That's I can, there's a, this can turn into a cup and handle. There's a very good probability, there's a very good chance it can, but again, I'm just way ahead thinking. It's thing can, this thing can go. Okay.
Yeah, as I said,
They
Provo
have,
is going to be acquired by Skyworks.
but here's the thing though. This company has 40% exposure in Apple. Okay. Apple popped yesterday after earnings, so does this stock. That's why the stock hit 9,400. I looked at that thing through ChatGPT. It's like this company is 40% exposure to Apple, which is very, very heavy. They technically owns half the company. Okay. So it's like Apple takes a hit, so does this stock because there's so much it has exposure to Apple companies. So what else they're doing that's different, but their their main hardcore, the main ties is Apple stock. So we know where Apple is. Well, this is where this stock is gonna go as well. Okay. So this you gotta keep that thing in mind. All right, oh boy, you're gonna die on me, buddy. No, 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 no. There you go. See, once I'm gonna start running heavy scans, it's not gonna work. It's a lot of data. That's why. Okay. So I'll run a scan though. I can post them there. Okay, I think that's it. I'm tired. Yeah, this is good. It looks really good. I think this one has a buy signal here as well. Yeah, this one just starting 2 weeks ago. Yeah, this is right at 90, 60. Yeah, nice. 6% move. Yeah, well, yesterday it popped because of Apple earnings. I know that. There, I'm gonna stop this